You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is October 3rd, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. First thing to know is European political tensions ease as Italy plans to cut budget deficit. Market jitters eased on Wednesday, and the euro rebounded amid reports that Italy's populist government plans to cut its budget deficit after next year. Italian newspapers reported that the government will reduce its budget deficit targets for 2020 and 2021 by 2.2% and 2% respectively, and stick with its plan for 2.4% in 2019. The government originally stated it would run a deficit of 2.4% for 3 years, which would have breached European Union fiscal rules. Italy has the biggest nominal debt in the EU, and its promise of increasing the deficit sparked fears of a renewed fiscal crisis and caused a steep increase in 10-year Italian bond yields earlier this week. Second thing to know today is ADP and ISM data is on tap, and the IFM economic forecast is expected. Investors will be paying close attention to private sector employment numbers ahead of Friday's government non-farm payrolls report. The ADP private sector payrolls number comes out at 8:15 a.m. Eastern Time. On average, economists expect that the September payrolls rose 187,000 from 163,000 the month before. At 10 a.m. Eastern Time, the ISM will increase its measure of September services activity. The ISM non-manufacturing PMI is expected to have ticked down to 58.1 last month from 58.5 in August. The International Monetary Fund will also update its global economic outlook at 10 a.m. Eastern. IMF chief Christine Lagarde hinted in a speech on Monday that the organization could cut its growth forecast due to trade protections and high levels of debt. Third thing to know is global stocks rebound and Pier 1 Imports and Lennar report earnings. U.S. futures inched up on Wednesday as investors looked ahead to upcoming data and concerns over Italy eased. Fourth thing to know today. Oil prices firm as EIA inventory data is awaited. Oil prices remained supported near 4-year highs amid expectations for tighter markets for next month as the U.S. prepares to reimpose sanctions on Iran. London traded Brent crude futures were up 0.21% to $84.98 a barrel from their last close, within striking distance of the high of $82.55 reached Monday, the most since November 2014. U.S. crude prices were steady at $75.33, hovering near Tuesday's four-year peaks of $75.91. Fifth thing to note today is Aston Martin stock falls as IPO underwhelms. Shares of luxury automaker Aston Martin tumbled on their market debut in London amid investor concerns over whether it can deliver on its ambitious growth plans, which include a rollout of new models. Aston Martin priced its shares at £19 each, giving it a market capitalization of £4.33 billion, which is about $5.63 billion. But shares fell as much as 6.5% and were down 5.26% by 6 o'clock a.m. Eastern Time. Our second story today is from CNBC.com. Weekly mortgage applications flatline along with interest rates. If no news is good news, then there's good news in the mortgage market. Mortgage application volume was unchanged last week from the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. But volume was 15% lower than a year ago, and interest rates were more than 80 basis points lower. Applications to refinance a home loan, which are highly rate sensitive, had no reason to move and barely did, falling 0.1% for the week. Refinance volume has been weak all year, as interest rates moved sharply higher in January and are even higher now. Volume was 33% lower compared with the same week in 2017. The average contract interest rate for 30-year fixed-rate mortgages with conforming loan balances, which is $453,100 or less, decreased to 4.96% from 4.97%, with points increasing to 0.49% or to 0.49 from 0.47, including the origination fee, for loans with 20% down payments. This is just off the highest level in 7 years. Our third story today is from CMEGroup.com. CME Group averaged 17.5 million contracts per day in September 2018. That's up 3% from September 2017. CME Group, the world's leading and most derivatives marketplace, reached average daily volume of 17.5 million contracts per day during September 2018, up 3% from September 2017. Open interest at the end of September was 120 million contracts, up 6% from September 2017 and up 11% from year-end 2017. Third quarter 2018 average daily volume reached 15.6 million contracts, down 1% from the third quarter of 2017. And our final story today is from CNBC.com. Private payrolls grew by 230,000 in September versus 185,000 expected. Job growth surged in September to its highest level in 7 months as the economy put up another show of strength. That's according to a report Wednesday from ADP and Moody's Analytics. Private companies added 230,000 more positions for the month, the best level since the 241,000 jobs added in February, and well ahead of the 168,000 jobs added in August. The total was well ahead of the 185,000 jobs expected by economists surveyed by Refinitiv. How do they come up with these names? Construction grew by 34,000 as goods-producing industries overall contributed 46,000 to the count. And that, ladies and gentlemen, is news you can use for today, Wednesday, October 3rd, 2018, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.